What a day in the markets today. Nvidia stock was down 10% today alone, and Nvidia is down 20% from its recent high. SMCI, another popular chip and AI stock that works with server racks, is down over 40% from its recent high and down over 20% today. And then we also have the S&P 500 now down 6% from its recent all-time high. There's a few reasons why we're really seeing these sell-off. First, TSMC posted earnings and they were a little weaker than expected due to some demand issues. And then we also had Fed official Goolsbee pretty much saying, and please note that he was Fed dove and he usually was more accommodative for the markets. He's actually dialing back his rate cut expectations and said that the Federal Reserve might have to keep interest rates higher for longer. That shook the markets a little bit, and there's fears because of that. If interest rates are this high, I think the Fed really wants to prevent a double inflation spike like the 1970s. So they're really studying the textbooks from then to prevent that from happening. And then obviously we had the geopolitical scares from the past week and a half. That hasn't helped the markets either. There might be some calm now. Obviously we have to see, but AI stocks and chip stocks really have really got the air taken out of them recently. And partially, they have to come back to reality. They were starting to get a little bit overvalued. Obviously, we have the AI growth story, which is going to be huge in the medium to long term. But AI stocks were starting to get a little bit overvalued in terms of their fundamentals. Their prices were getting a little bit too high too quickly. So with TSMC's earnings report, those kind of stocks were bound to come back to earth. And that's why we saw Nvidia down 10% today and technically in bear market territory down 20%. And SMCI, that stock also came down to reality. So this is something we have to watch. Obviously, we have the rest of March. And then beginning of April, we might see a little bit more volatility with the market getting into grips of interest rates being higher for longer and a lower amount of rate cuts this year, perhaps one or none. Due to higher than expected inflation. But if I made a video about this the other day, if the markets are declining like this, that causes tighter financial conditions and the decreased wealth effect, which could lead to lower demand, effectively lowering inflation, which we could see in the April and May inflation reports, and hopefully that could spill over into those CPI inflation reports, which could then give the Fed confidence again to bring back more rate cuts into the picture. But that's a theory I made in my other video. So it's something we have to see. But let's see how the market reacts end of March into early April. I think we're due for a little bit of a consolidation or pullback. The market was getting a little bit too hot too quickly. But now we're getting a little bit back into reality. I'm still long-term bullish. My price target for the S&P 500 is still 54 to 5,500 by year-end 2024.